Welcome to the Money Tree Real Estate Investor Podcast, where we learn from real estate professionals across the industry. They will share about how they got into real estate, the big wins they have celebrated, the mistakes they have made along the way, and the advice they have for anyone following in their footsteps. Money really does grow on trees. Hey everybody, it's William Holland here for another episode of the Money Tree Real Estate Investor Podcast. I've got a special guest today, Agostino. I'll let you go ahead and introduce yourself and tell us a little bit more about who you are.
Hey man, well thank you so much for inviting me. I really appreciate it. And audience, thank you so much for listening. Really appreciate that too. If you guys don't know me, my name is Agostino Pintus. I'm the host of Bulletproof Cash Flow. But one of the things that we also do is we buy a lot of real estate. We specialize primarily in commercial real estate. We have three lines of business that we do: multifamily, we can focus on that; development and redevelopment type of deals; and single tenant net lease primarily is what we do too. So through these three lines of business, we have plenty of deal flow taking place. We're in for about $350 million worth of stuff currently within process that we are actually building or at various stages of progress. But hopefully here we're going to have all this stuff built out here soon. So it's a very substantial portfolio. We're looking to get to $1 billion over the next 4 years. So yeah, that's what we do, man.
That's really cool, man. So a little bit more before we dive in too deep into real estate. So I understand you're bilingual. You speak Italian, is that right?
That's right. That's right. Not every day. But yes.
Then, so your parents were from Italy. They moved to Canada, and you were born and raised in Canada. So you've lived in Canada. You lived in the U.S.
Yes.
Which do you prefer?
Oh, yeah. I'm still an American. I often tell people I never belonged in Canada. That entrepreneurial spirit was there since the very, very beginning. And no offense to any Canadians out there, but if you are Canadian, you know that they're not very friendly to entrepreneurs. And America is the place for entrepreneurs. It still is, even despite the current situation, what's happening. It's still a place for entrepreneurs. If you want to change your life, you still do it here. That's where it's done.
That's awesome. So we were talking earlier before we started recording. You live in Cleveland, Ohio, and you just bought a big building there. So it's the John D. Rockefeller building, and you're sitting in that building right now as we speak.
Yeah, that's right. That's right. We closed on this one a little while ago. We're going to be kicking off development here in a couple of months in January. So these types of deals are very, very complicated. They're a very complicated capital stack. When you have historical tax credits, you have different types of financing that go into putting these very complex deals together. You have to bring in a lot of parties, right? So we're finally coming to an end with all that, and looking forward to swinging hammers here in January. But yeah, it's a mix of multifamily, about 436 units thereabouts. We're going to have 2 floors of office. And the lower level is going to be largely restaurants, food and beverage type of places. And the cool thing about this building is that it is directly across the street from Sherman Williams World headquarters. So it makes for a great asset that of course is going to have plenty of jobs to support all the businesses that are going to be, and the people, of course, that are here in this location. So yeah, we're very, very excited about it.
You'll have a nice tenant base.
Yes, that's right. That's right. A lot of great stuff happening down here in Cleveland, Ohio. That a lot of people ignore this market, which is good for me, of course. But it really is a great exploding market, and has been since we really decided to make the focus here 5 years ago thereabouts. I can't believe it's been 5 years, but yeah, close to 5 years anyway. We've been in this market, just buying up as much as we can.
That's really cool. So I went to Texas A&M. I've actually met Myles Garrett before. That's a big dude.
Right.
So I would say the only thing that Cleveland needs to get figured out right now is their quarterback situation. No offense.
Right. That's right. Yeah.
So you mentioned capital stacks, and I know this deal in particular is pretty complex. Can you kind of walk us through what that capital stack looks like and describe that to us?
Sure. At a very high level, typically when you have a deal like this one, this is a historical asset, right? So this is a deal that John D. Rockefeller put his hands on back in the turn of the last century. The first part was built in 1901, the second part was built in 1907. and it's on the National Registry for Historical Places. So that makes it a historical asset. So great, that's good. So now what does that mean though? Well, because it's a historical asset, you get historical tax credits. Super, great. And what else you have? Well, the city of Cleveland had a tax abatement, 15-year tax abatement. Okay, so you have that on there as well. That it impacts your NOI. There's no tax credit per se, but there is some sort of rebate on that. You have something called PACE financing. The PACE financing is basically financing for like when you promise to install energy efficient type of lighting and windows and things like that for the building. You get a credit for that too. You have a Port Authority credit. You have what else is there? The lending itself, of course. There's potential of state tax credits. You have all these different tax credits, all these different players involved, right? That's just the tip of the iceberg. So when you have all that, plus the equity, that totals up to the 95 million thereabouts is what it's going to take to build this thing. By the time it's done, we have a valuation of about 135. This deal will be worth 135 million when it's completed. And based on NOI, really it's NOI that drives the value of post-construction assets, right? So in this case, because it's so complicated, the lender has to be a very specific lender that likes these types of deals, understands these types of deals, understands how the tax credits work, understands how the money flows in and out. So it's like that's the key thing when it comes to putting deals together. Any type of deal, it doesn't have to be just these types of deals. Even development or even stabilized multifamily. Some banks don't like multifamily, believe it or not. Some of them don't like it. Some people hate it. They love doing industrial. So it's like if you take your multifamily deal and you go to an industrial lender, maybe they'll give you terms. They're going to be terrible terms, but if you don't know what you're doing, you'll take that deal, and it's not a good idea to do that, right? So it's lining up the right lender with the right deal becomes paramount. And in this case, we have to find the right deal for the right lender, and we did. We have a great partner that is helping us with this deal. And it can be very, very complicated, like I said, because typically when you have tax credits, like historical tax credits, it's just a credit. So what do you do with a credit? Well, you have to monetize that credit. So you sell off credits to different groups of people, and then that's how you monetize it to turn it into actual money. And then once you have the actual money, you throw it into the equity stack, and then that's how you get things paid off, right? So, yeah, it can be very, very complicated, obviously very time consuming. It's a little more time than just stroking a check and sending it off and getting a deal started, because there's certain promises that come with using those tax credits. For instance, like we can't change any historical component of the property.
Right.
So I mean, who would want to anyway? We had no plans of doing so, regardless, because it is beautiful. But if someone like there's another gentleman, he's my next door neighbor. He's a billionaire. He has one of these historical assets too. He didn't wait for any of this stuff. He just dumped a bunch of cash into it, tore up the whole inside, and built it the way he wanted it. Good for him. Great, you could do that. We chose not to. We want to keep and maintain some of the original stuff from 1901. Which has a lot of character. It's part of the character of the building.
Right? You can't buy character.
Yeah, can't buy character. Absolutely. So
I bought a home recently here in Dallas, and I'm in an old neighborhood. So the trees are old and big and tall, and you can't buy that. I mean,
yeah, that's right. So like I said, it's certainly very, very complicated to do these types of deals, but it certainly is worth it. There's some scary moments, but certainly is worth it. It certainly is worth it.
that's awesome. Yeah. So right before you got into real estate, you had a big setback. So I understand that you lost your job, and that's kind of what propelled you into this. So it might have been a blessing in disguise. But how did you get back on your feet and just keep pushing forward?
Well, the thing is that I've been an entrepreneur my entire life. Since I was a kid, I wanted to have my own thing. I wanted to do my own thing, right? And I thought technology was going to be it, so I went the route of tech, right? engineering degree, two master's degrees. One of them was in technology, the other was a master's of business administration because I had every intention of running my own business and something to do with technology, right? I had no idea what real estate was. It wasn't even nowhere on the radar. But I was one of those kids at 10 years old. I was coding, I was writing software. I mean, I was one of those kids, right? Because I was so into that stuff. And the thing is, though, is that I had great success working in corporate America. It was fine, it was dandy. The thing is, though, it's like it's kind of like being a square peg in a round hole, right? It's like you're fine doing it, but is it really what your true passion actually is? And the thing is, though, eventually your passion will overtake you. And even though I had great success in corporate, the greatest success in corporate that I had was when the CEO of the company really liked me. He just handed me a bucket of money and just told me, do whatever you need to do. I don't care. Just report back and let me know how things are going. And so
Wow.
it's almost like you're autonomous. I'm running my own company within the company, right? So it's a little different. But anyway, the thing is, though, is that the older you get, and as you rise through the ranks, as at the C level, especially is where I was, C level CIO, you have a big target on your back, and eventually CIOs, they only last a couple of years in their positions. Um, the last position I worked at, it's kind of like how long, and I got fired again, right? Even though I rescued the company, the previous CEO brought me in, I fixed the company up. He leaves because he gets angry with the board of directors, and the new guy comes in. He hates me, back on the street again. And it's like, how many times can I basically do this? How many times can I get fired? How many times can I put my life in the hands of someone else? And on a day-to-day basis, your fortunes will change. And
Right.
I really don't want to be sitting there in my 50s wondering what I'm going to be doing. So I decided to give my entrepreneurial spirit a shot for real this time, and I went all in. And part of it is you have to have that all in, burn the ships type of scenario. I mean, it's tough to do. You have to really believe in yourself, and you have to believe in yourself. You have to be willing to push through all the garbage and the nonsense that's not only in your head, but also what's coming at you from friends and family and whatever else. Right? It's tough to do, man. It's very hard to be an entrepreneur, but
Oh
it's
yeah.
like, if you're able to push through for 1, 2, 3 years, and eventually get through it, you become very, very successful.
Right.
But part of that comes with a lot of hard work. I mean, I
A lot
mean,
of discipline.
a lot of discipline. Exactly. I mean, part of this was once I made the commitment. I mean, I trained day in, day out. What I mean by trained was I got my hands on books, training programs. I didn't have a mentor. I didn't even know like there was such things. Like back then, there were no like gurus like you see today. And I
Hmm.
was just getting my hands on all kinds of books, material, everything I could, just studying everything day in, day out. From the time I woke up to the time I went to bed, learning as much as I can about how to do deals. Like I'd already been doing real estate up until that point, like single families and stuff like that, but not commercial. So you have to get very, very good at putting a deal together and building and demonstrating value. So um, I would never, ever, ever go to work for anybody ever again. I just can't do it. I would never do it. I would take one bad day doing commercial real estate than one good day in corporate America. So I mean, so it's when you realize that you're able to be able to have the freedom to do what you want when you want to do it. It's very hard to give that up. It really is, right? So, but and I'm not saying that that's for everybody either. It's perfectly fine because it is. You really do have to know what you're doing to do the types of deals that we do. It takes a high degree of dedication, right? I mean, it's not easy. Certainly, it's not easy. It's very, very hard. It's not as easy as the gurus on Facebook tell you it is. It just isn't. It just isn't.
And it's super satisfying. I mentioned earlier, my background is construction management, so I built a 26-story building. That was a 2.5 year project. I managed over $20 million for the scope myself. And I have an engineering, study mechanical engineering, so I have that background as well. And it's like, man, there's so many late nights, so many, hour, all day long, coordination meetings and phone calls and mistakes that were made that had to be, taken care of and fixed. And like I've been through that as well, and it's crazy the process to get there, but it's so satisfying to be able to drive. I drove by it literally today, and it's like I can point at that building, and it's one of the tallest buildings around, and I can say, hey, like helped build that.
Yeah,
It's pretty
yeah.
cool.
But you certainly know it's not easy, right? So, but I still recommend to people to get into real estate. The one thing that I did not know working in corporate, even when I was making making decent money in corporate. I mean, for what corporate is, um, I wasn't told go do real estate. I wasn't told you can use a 401k and roll it into a self-directed IRA and roll it into and start doing your own deals. I wasn't told any of that stuff. They didn't want you to do any of that stuff. They wanted you to stay in your seat and make the company money. Nothing wrong with that. It's okay. I'm not mad at it. But I think there's a lot more education now to help people build some real sustainable wealth, and that is a big deal right now. You have to be able to do that because you never know. You may be out of a job tomorrow, and you have to make sure that you have cash coming in for your family. You have to. It's your duty to do so, right? So, and that's part of what we do. That's where we create these different mechanisms to help people get into these types of deals. Not everyone. You don't have to do. You don't have to be a GP, a general partner, every single deal. It's not necessary. It's not. It's a lot of work. I had one guy asked me the other day, very wealthy guy, 200 million. He's worth $200 million easily, right? Hey, how do I become a GP on something like this? I'm like, why would you want to? Why? Why do you want to do this? This is a lot of work. Are you sure are you willing to do this? He's like, oh hell no. I go, good. Throw in your million, and I'll just handle it all. I'll take care of it.
Yeah,
So it's a lot of work. It's a lot of work, and to invest passively in some of these deals, nothing wrong with that. Nothing wrong with that. You still get the same return and none of the headaches. Why not do that?
sure. Yeah, exactly. That's awesome.
Passive investors in real estate are able to receive a check every month. Some people call that mailbox money. We say money really does grow on trees. Visit the website at biggerpictureholdings.com, where we have a ton of free resources to help you learn more about planting your very own money tree.
We talked about setbacks. I know you've kind of got three different branches of your company. If you want to quickly, we've talked about the development aspect a little bit. If you want to talk about the net lease and then the multifamily a little bit more,
Sure.
we can go into that.
Sure. Well, it actually started the business. When I started it, started off with doing stabilized multifamily, right? Like value add stabilized multifamily. There's something to say about getting good at one thing, like becoming excellent at doing one thing, right? And multifamily, buying the stabilized multifamily was it. So we bought a lot of multifamily over the course of over a very short time frame. I'm actually, according to Colliers, I'm one of the top 5 buyers of multifamily in Northeast Ohio, it seems. So, but
Nice.
that's because I got really, really good at picking the right deals and not overpaying for stuff, not being ridiculous about some of the pricing and things like that. But they also have to be able to pivot, right? So when I saw, because I know I focus, I'm a real big believer in focusing on one market. I'm not a guy that goes and buys 100 units there, 100 units in North Carolina, 100 units in Texas, 100 units here. Without the scale, it's very tough to manage, right? All of our deals are in and around Cleveland, and they're usually 10, 15 minutes away from each other, so you get to have some scale when you do that. It's very, very important, totally underestimated, right? But when we saw that the market became frothy in terms of like the asking prices for some of these assets were getting to be very, very expensive, and the cost of debt was starting to climb a little bit. It didn't make any more sense to do the deals anymore, but it made more sense to buy the assets because of all the other incentives that come along with it. In our case, like I mentioned before, you have opportunity zone and you have tax abatements, right? Which the tax abatement stuff is eventually going to burn off here in Cleveland, but you really have to know what you're doing when you're putting these deals together. The thing is that by putting those types of deals together, you're improving the NOI significantly. You're building a brand new product with, I guess you want to call it basically A-class product, right? With A-class tenants and no headaches, with not like it's it's a brand new asset. You don't have to worry about broken boilers or any other madness related to the asset itself. And then we're building this stuff in great locations, like this asset here, right next door to Jobs. We have another deal. We have several deals over by Cleveland Clinic, world headquarters. They have 20,000 jobs over the next 10 years, and we're building, I don't know, a couple hundred units right within walking distance for those 20,000 jobs. Those are the types of deals that we do. It's a whole bulletproof cash flow mantra, if you will, right? And when you couple that with the whole tax abatement and OZ, the opportunity zone component, think of it like this: if you had some capital gains, you had 100 grand of capital gains you made in the stock market, you could take all that cash, roll it into opportunity zone deal, like the ones that we have, okay, all of it, no taxes, right? Like you would pay capital gains on the 100K, right? But in this case, you don't, because you put it to an OZ, and then you have it hang out in this OZ. And then in 10 years, we multiply it by 3, and now you pull it all out cash, tax free. How strong is that, right? When you have those types of deals that you can put together, and you also have a 15-year tax abatement that comes along with it to improve the overall NOI, it's a great deal. You can't beat it, right? I'm not saying that we're the only place that has OZ. I'm not saying we're the only place that has tax abatements. But certainly those other places are not very strong in terms of the jobs, So that's really what the primary driver is. I mean, you touched on job losses and things like that. I mean, there's 20,000 jobs coming to this market, health related too, by the way. As long as there's people around, there's going to be a need for health, right? So those are the types of deals that we're doing, right? And it makes total sense to do those, right? So. Anyway, so that's what we made the shift to development. And then when it comes to net lease, the whole net lease component really came to fruition because we had a lot of investors that wanted the need for steady monthly cash flow with very little risk. And net lease does that. The difference that we do, though, is we use a fund, we use a blind pool to buy these assets. So the pool might have, I don't know, 10, 15 of Dollar General, Dollar Tree, Advance Auto Parts, whatever, like brands that you know and love that either come with a corporate or franchise guarantee. So the cool thing is that not only do you get a monthly check, all right, you can predict down to the day. On the third of every month, you're going to get a paycheck from these guys, right? Third of every month, the check comes in. Hit your ACH and it's there, okay? You also have corporate guarantee. Is Advanced Auto Parts going to go out of business tomorrow? What do you think?
It's gonna be tough. I wouldn't see it happening soon.
Right. Dollar Tree, Dollar General, those guys aren't going anywhere, right?
Mm-mm.
Aldi, Kroger, all these guys are going to be around for a very long time, right? And they know it too. That's why they guarantee the leases. So it's a very, very secure type of deal, right? I mean, it is a risk-adjusted return. I mean, certainly it's not as juicy as a development deal. We know that. But if you're looking for a stable monthly return, right, a nice deal of a monthly return, that's perfect for an investor, right? So what we're trying to do is we're offering investors multiple avenues to earn steady income while invested in developments. That developments don't pay right away, as you know, right? Developments might take, whatever it takes to build these. Your project took 2.5 years. And I'm sure at that point they have to do a lease up after that, So they have to wait a little bit. That's very patient money, but they get a big squeeze at the end, right? So that's the thing. I mean, so we offer multiple investment opportunities for our investor pool. That's why we do it this way, right? So yeah, it's that's what we set up a multiple ways for them to make money. It's really all this stuff is to help the investors. That's what it is.
I love that so much, man. You've talked about so many good things. One thing I think just to highlight a little bit more, so you talked about the opportunity zone. So one thing that listeners have asked, is just to clarify terminology and things that are discussed. So can you describe what that is real fast?
Sure. So opportunity zone, OZ, back in, I want to say 2016, I believe, when Trump was president, one of these senators came up with this plan to basically revitalize certain areas that were not so good, really not good areas, but try to get money to flow into those areas, right? And this opportunity zone scenario came about at that point. And so typically you're going to find these opportunity zones in most states. They have them. Unfortunately, many of these OZs, opportunity zones, are in not so good areas, right? Very bad areas that you would never want to be in. That's the key, right? So if it's in a not so good area, no one will ever invest any money in it. No one's going to build a high rise. No one's going to build any multifamily, right? Here in Cleveland, pretty much the entire city of Cleveland is opportunity zone. The governor gets to define the zones, and the governor just circled Cleveland and said, all of it's OZ. So that's why all this money is rolling in here. Whereas down in your neck of the woods, I have friends of mine that live in your neck of the woods there down in Dallas. There are OZ areas, but you would never invest in those types of areas, right? So, but generally speaking, like I mentioned before, what it does is it protects the cash that goes in there, and basically you don't get nailed with any capital gains when on the exit. So if you put a bunch of money in there and you make say you put $100,000 into an OZ deal, and it multiplies to $300,000. At the end of the 10 years is when the 10 years is up, you pull out all $300,000 tax free, right? So that's the cool thing about OZ. There certainly is a provision in there that says if at 7 years, I think there's some sort of percentage or something like that. Our intention is usually to keep it in there for the entire 10 years. It just depends on the deal, right? But that's the real big crux of it, is that you're able to get this huge tax benefit. It's to encourage investment in those types of areas. That's really what it is for.
Yeah, I love that. That's cool that they've made something like that.
Yeah. Yeah,
So the last two topics, a loss. We always want to be educating the investors. It's not all wins and it's not all roses in real estate. If you could describe a loss or a lesson learned that you have, and then we want to wrap it up with a big win that you've got as well.
Sure. I'd say the biggest lesson there is who you partner with. That's probably the biggest thing I could say. We talked about this a second ago. It's who's real and who's not. We were talking before you hit in the green room. We were talking a little bit about that. And who you partner with is just as important, because you really have to find the right partner and not be in a big rush to get into those types of deals. Because the last thing you want to do is jump into a deal with a partner who doesn't hold up their end of the bargain, who is just there along for the ride, who doesn't perform like they say they're going to perform. That's the toughest part. That's probably one thing I learned is don't be in a rush to partner up with somebody. Get to know them a little bit. Try to meet their family if you can. Look at some of the things they've done in the past. Do they have any integrity? It could be something as simple as, you know what? Let's meet for coffee at 3:00, and the guy doesn't even show up, or shows up at 4:00 or 3:30 or whatever, right? It tells you a little bit about their integrity. I know it's but who cares? It's only a little meeting. Yeah, but it tells you something about that individual, doesn't it? It does, So it's something small, seemingly small, but I would say that get to know your partners. I would say number one. Number two, don't be in a hurry to do deals. Don't get into a deal for the sake of getting into a deal. It's probably the best way to put it. There were some coaching students. We used to do coaching, like one-on-one coaching, a long time ago, and one gentleman, he was in such a hurry to do deals, and he brought a deal to us, right, to our team, and I'm like, I look at this deal, I'm like, don't do this deal. It's a terrible deal. Don't do it. Oh no, I really want to do this deal. I really want to do this deal. I'm like, I don't recommend you do this deal, man. This is a bad deal. Oh no, I'm going to do this deal. I got to do it. I'm like, well, I'll tell you what. You go ahead and do the deal, then. You're certainly going to learn a lot when you do that deal, because it's a terrible deal. And boy, was I right. Right? That's what I do for a living, right? So you had everything from the guy would carry around a gun with him to go collect rent. He'd brandish his weapon to go carry, to go collect rent and knock on
Yikes.
the door, right? Do stuff like that. He would, when you examine the rent roll, it was a small little 30-unit deal, and I think it was 18 of the tenants all worked for him in one of his businesses. And then the day after closing, he fired all of them. I mean, it was all there. I saw it. I told him he didn't want to hear it. So it's like, don't be in a hurry. Don't be in a hurry to do the deal. If someone that knows better tells you not to do the deal, you should probably listen to them. That's a good idea. That's a good idea. Always listen to them. Take the advice of an experienced person that knows what they're doing.
I love that. Thank you so much for that value right there. So, spotlight's all on you. What's the biggest win that you've had in real estate?
So far to date, I mean, this Rockefeller deal is certainly one of the hardest ones that we've done, just because of the challenging personalities that come along with it. So real estate can be a very hard business. And like I said, like I alluded to a second ago here, is the personalities. But if you're able to navigate the personalities, understand who the sellers are, what their needs are, and really fulfilling those needs, you can really make some deals happen. And that's what it took for this deal. I mean, it was a tough deal to get over the line, just because it was during COVID. All the banks left us at the altar, and the seller was just tough to deal with. It didn't want to hear that all the lenders left. Didn't want to hear that the markets changed, the conditions changed, or whatever. Just didn't want to hear it. But now, today, out of that tough purchase that we did, we're known now as one of the top guys to work with in terms of like getting hard deals done. Like, we know how to get a hard deal done now because of that. Because of this deal, we know how to get hard deals done. Like, we get very, very creative. We're very, very easy to work with. We're not tough as nails. Like, we're very easy to get along with. We don't make deals easy. And if we think that the other side's going to be super difficult or be just jerks, we won't work with them. Like, we just won't. We just choose not to. We don't have to. But the thing is, though, is like we have to become very easy to work with, and that's one thing that certainly was able to test us on that. That's for sure. So. But yeah, this is the biggest one too. It's also 135 million. It's the biggest deal we got so far. But hopefully by the end of this year, we're going to have some $100 million of ground up stuff that we're working on too. So the fingers crossed that we'll get it over the line by January. So there we go.
Same.
Yeah.
There you go. That's cool. I'm cheering you on, man. So how can people contact you?
Sure. Bulletproofcashflow.com is one way. Certainly have all our portals and all that fun stuff on there. We're all over social media, Facebook, LinkedIn, Twitter, all of it. So yeah, just you have a deal, you have a question, reach out. We're there.
Sure. All right. Well, thank you so much for joining us today.
You bet, man. You bet. Thanks for playing.
Like and subscribe below. A new episode will air every Tuesday at 7 a.m. Are you looking for more content? Visit our website, biggerpictureholdings.com. And remember, money really does grow on trees.